Bitcoin is priming for volatility ahead of the monthly and quarterly close that is rapidly approaching. Hey guys, it's Keith Allen. The weekend is upon us. What a week it has been, right? Kind of exciting watching some of this price action finally reclaiming some key levels. Long awaited, right? It's been months that seems like Bitcoin price has been suppressed, and we're seeing some moves back above some key levels that we've been trying to reclaim for quite some time. We're seeing alts move. This is all, of course, not a coincidence, right? We've got obviously a rate cut cycle has begun, which was announced a couple of weeks ago. We got backup of some decent economic numbers this week, and we've taken out really a lot of resistance and a lot of ask liquidity, especially around that 65K range, which happened yesterday. And so now, what lies ahead with a weekly close happening Sunday and a monthly and quarterly close happening Monday. We're going to take a look at all of these things. We're going to look at FireCharts. We're going to look at the liquidity moving around in the order book. We're going to look at the candle charts, look at the key levels that we're watching, and see if we can make sense of all of this as we move into the weekend. Before we start, as always, just a reminder, if you like the stream, help us all out and smash all of the buttons. Especially make sure that you hit that subscribe button up above, tick the little bell so you don't miss any of these future streams, and share a comment, right? I love I engage with all the comments. In fact, the live stream is open, so I welcome you. I mean, live chats are open, so I welcome you to join us. Looks like we have one of our South Koreans putting something in Korean that I can't read. So if you want me to respond to that, use your Google Translate and put that in English, and I'll do my best to respond to you. Nonetheless, I'm glad to have you here following along. So without further ado, let's go ahead and share a chart, and we can start, I guess, on FireCharts as we like to do, and show you just this massive amount of liquidity that has been taken out, and quite simply, when liquidity is moved and not replenished, that creates pockets for potential volatility, right? Liquidity dampens volatility. Lack of liquidity or illiquidity amplifies volatility. And so we've been last week, we were rather suppressed last weekend, and this weekend, I think things are opening up to see some more movement. Whether we move up or whether we move down remains to be seen. And as you can see, it's actually kind of opened up in both directions here. So we've got pockets to the upside, pockets to the downside. Let's see what we can make sense of. Obviously, here this week, we can see that coming into the week, whales were selling and then began to buy, and they bought robustly into some of these key blocks. This was really right at the beginning of the week, where we bought into this block of ask liquidity, took that out, a little bit of a pullback here, some profit taking, if you will, and then again attacked that 65K level, which really had some solid support. It was really insulated pretty well here, and I think this was about around 70 million in ask liquidity here that was taken out handily in a matter of minutes yesterday. So now we're sitting here. We've been above 66K yesterday. We were all excited about being above the 200-week moving average, the 200-day moving average rather, and the 2021 mid-cycle top. And let me show you why that is important. We'll head over here to the candle chart, and we had some trouble getting back above this purple 200-day moving average. As you can see, there was several days, looks like more than a week, 1, 2, 3, 4, 5, 6, 8, more than a week of resistance here, where we were. I mean, obviously it was resistance for a long time, right? We were below it since the beginning of August, and we really only spent a little bit of time there above it since initially losing these levels back in June, when we kind of broke through that through the that upside above 70K and came back into this range. And so this purple 200-day moving average, which technically was lost. That specifically was lost at the beginning of August. But this 2021 mid-cycle top was lost much earlier, right? And that was back in June. And important that we move back above this level. That level is important because if we go back in history, back to 2021, we can see that that was where things really started to top out before we got into the all-time high. And we could be looking at a similar situation here where this might be a relief rally that takes us to a new all-time high, or this could just be a classic fake out. For right now, I can tell you that shorts are getting punished. And if you're shorting in this environment, I would just say that's not something I'm doing, but I would say that be prepared to DCA your way into that short because it looks like 70K, this 2021 top is coming into range, 70K right there, above it, obviously. And then this 71,900, just shy of 72, is really where the higher highs are that we're trying to take out. This actually, right here today or yesterday, was the first hint of a higher high that we've made. And so, can we continue this? Can we go after the next set of higher highs? That first means we have to take out the 2021 top, which, as you can see, we have been rejected from dozens of times since we first visited that area back in early to mid March. And so I still think, as I've maintained all along, that it's going to be a range by range game where we reclaim a level, consolidate for a minute, and then go higher. Well, maybe that minute is extended a bit longer, potentially past the election, because look, we've been grinding through this range here for months and months and months. I'm not necessarily expecting a hurry up offense to run to new all-time highs prior to the election, right? Election's coming up in early November. It's rapidly approaching, right? So the market obviously hanging a bit in the balance around that and all the geopolitical tension that is just ratcheting up around this time. Is it a coincidence that it's leading up to the election? Probably not. Not gonna go down that rabbit hole here. What I do want to focus on, though, is these levels that we need to remain focused on. And so for this to continue, obviously we need to see more candles printing above this 2021 mid-cycle top. A breakdown obviously welcomes a retest of the 200-day moving average, and a potential breakdown from there leads us, to the other key moving averages. Notably, though, notice how we're starting to see these unwind, right? Golden crosses after we had all of these death crosses. Remember the death crosses we talked about earlier last month when we had like a bunch of death crosses. I think 9 or 10 of them all happening like in a matter, not 9 or 10, like 5 of them happening in a matter of 9 or 10 days. And so this is a welcome sight. We had seen here, these death crosses, and we talked about this in the analysis back then, that one of the things you look for is when you have this many death crosses happening in a short amount of time, it obviously means that price is degraded quickly. But we looked for this double bounce, and we got it. And this is something that we have seen as a result of, or at least a way to mark bottoms of prior similar death crosses. And so not all of them, but many of them did show this. I'm not going to dive into that now. We went into that a bit yesterday and on some of the other analysis. So if you want to go see that, you can go back to the other one. Hey, Mike, nice to have you back. What's up, brother? As we head into the weekend, I thought, it's a little late in the day for me to be doing this, but I did want to squeeze one of these out before we headed into the weekend, because I think we're looking at some potential volatility here as we move forward. So this certainly a welcome sight, as was the first golden cross we saw on the weekly between the 100-week and the 200-week moving averages, right? These are all, of course, these crosses are all lagging indicators, but this was a good thing to see. And now it's good to see the lower time frames starting to unwind. It looks like this cross between the green 21 and the blue 100 is also evident here in the next day or two if we stay on this trajectory. So those are positive signs, no doubt about it. But we know that this game is not for the faint at heart, and we could see things change rapidly here, as has often been the case, especially around the Wild West weekends here in the magical, wonderful world of crypto, right? So what do we have coming up here? Sunday a um, we have a weekly close, and Monday we have a monthly and quarterly close. Those are obviously very important, right? And the higher the time frame, the more significance it has as far as I'm concerned. So as you can see, trend precognition giving us some nice signals here on the daily. Actually, back-to-back long signals here on the A2 plus algo up here, and we have confluence with this one with the A1 algo down here. This is potentially played out for the day. This is again a daily time frame. These signals are relative to the time frame that we're looking at. So if we zoom out to the weekly, what might we see on the weekly? We can see we have upward momentum already happening, and so we're not going to get a new signal from the A1 algo. We could conceivably see a new signal from the A2 algo. These signals, the A1 signals, happen when when this orange A1 slope line crosses this blue dashed line in the center. We're already above that, so we can either see an extension of this, and we could see it change in its trajectory, which would indicate strengthening or weakness in the momentum. If it gets more vertical, it's getting stronger. If it's getting more horizontal, it's weakening. And obviously, we could also see it revert and start to point downward and show some real softening in the momentum. And if it crosses below this blue dash line, well, that would potentially, if it crosses below, that would signal a short signal. So those are things we'll be watching on the weekly. Likewise, on the monthly, same set of circumstances, right? We're coming off of a green signal here, a long signal on the A2 algo. We could conceivably see one on the A1 on this monthly close, and because we're right here up against this this center line here. Now we could also see things revert. So I'm watching this monthly very, very closely to see if we do indeed extend above, or if we see a reversion here in the momentum. Likewise, for a monthly close, where do we need to see, to stay green, we need to close above basically 59K, which seems at the moment like that's okay, but this could change in an instant, obviously. But what's more significant, I think, is seeing higher highs here, right? So can we get into the situation where we're printing above a prior month's high? We took out this one, so we're already higher high from last month. That's good. The real higher highs we have to go after here are up here in this 71.9 range. So can we get up there conceivably? Can we, at least can we take out the 2021 top by this monthly close? We're looking at the same exercise here on the quarterly. Quarterly had a down signal here that we're coming off of, and that did indeed play out. Now, can we see a reversion with this A1 slope line to tick up and give us an indication that we're going to see extended momentum here to the upside over the next quarter? Historically, fourth quarter of the year has been quite good for Bitcoin on most years, except, of course, the years where we're kicking off a bear market. And, there's no rule that says that can't happen either. Hey, again, guys, by the way, the live chat is open if you want to comment. Mike says the timing of the stream suited me nicely. I'm glad I could accommodate for you. Have I covered liquidity yet? No, I haven't, and I will. We're going to look at the order book in depth here in just a moment. Love to see how much is still above versus current price. We will get there, my friend. We will get there. In terms of quarterlies, where do we need to be? The prior candle opened at 72,750. It closed at 62,676. So we would again, you want to see green, but ultimately, if we could close above this high, that would just be tremendous. That would be, uh, you know, putting in solid higher highs and get us on a trajectory to go after this all-time high here, moving into the end of the year. Personally, I would be surprised if we actually made a new all-time high before the election, but you never know. I mean, this is, despite what anybody wants to say or think, this is still the Wild West of crypto. So watching for these new signals and watching to see where these closes are to see if we can actually print higher highs in these various time frames to get some insight as to what might be coming up for October, November, December. In terms of liquidity, we could take a look at liquidity real quickly. I did have a couple of questions on X that I wanted to address. Oh, look, it says we're live. Because why? Because we are actually live. Will it come back in my face and show me that we're live? It does. Hey, look, there we are. Look, Ma, we're live. I had a couple of comments here. I forgot what they were asking for. Patrice was asking how the order book at 70K is looking. Is it very strong and congested or somewhat diluting on the bid side? Where's the strongest support? And then Justin had a question about ETH. How about ETH? Well, ETH is still a shit coin, but it's doing better than it's been in a long time. It's got a long way to go. We could take a quick look at the ETH chart, I guess, before I climb into liquidity. The ETH BTC chart might look better than the ETH USDT chart. At least it is working its way above the 21-day moving average, but not really convincingly, right? Wicks below every single day. So we've yet to see printed candles, full candle bodies above that 21-day. And we did have a rejection from the 50. So looking at that, obviously, let's look real quickly, and a long way to go to get back to the glory and get back on trajectory of really the macro, in my opinion. On the ETH USD, real quick. Similarly, we actually have seen ETH move above the 21-day and the 50-day moving averages. And so you'll notice this fib retracement, and this is a macro level fib retracement from the high down to the swing low, and now trying to go back and reclaim that golden pocket up here. So notice how you have absolutely perfect confluence between the 100-day moving average and the 0.5 fib. That's the bottom of the golden pocket. So this is obviously very strong technical resistance, but ETH needs to get back above here to have a shot. Really 3K, I think, is really the spot that ETH is going to run into some issues. So if we can watch ETH work its way above, then ETH has a chance of climbing back out of this and returning to its prior glory. But it also coming off of what appears to be a double bottom here and climbing out. Similarly to Bitcoin, it just seems to have a lot more technical resistance ahead of it on this chart. Now back to Bitcoin and FireCharts specifically. So the question was, what is the liquidity looking like around that 70K range? Well, as you can see, we're pretty well congested. There's a good amount of friction between here and 70K, right? And it's worth noting that this has thinned out quite a bit here since back in, when is this? June, when things were really heavy up around here. A lot of this liquidity has worked its way into the system. It's been distributed. It's been lowered. It got replenished up here. And as you can see, a lot of this went away, and then some replenishment here as well. But it's not what I would say is an overwhelming amount that can't be taken out. You're looking at about, just shy of 60K here. in this bin. Um, and I again think that 69K is don't let me just say, don't sleep on 69K. A lot of people have said, well, 69K is not that important. You've got these higher highs that are, technically more important. Well, you don't get those higher highs if you can't sustainably maintain the 2021 top. So that's the first thing I need to see. Again, look at every time that we've engaged with that level. There's either been a wick below, there's been one or two candle bodies that stayed above it, but those, as you can see, were met with trend precognition signals that pointed the way down, and price indeed did follow. So rejection after rejection, rejection after rejection, one candle body, and then rejected again. Same set of circumstances, one candle body, down signal from trend precognition, and down it goes. So this is a very significant level that needs to be reclaimed, and we need to print full candle bodies above it before, in my opinion, before we have a sustainable or what looks to be a sustainable move that could go after this higher high here and then ultimately the all-time high. So that is something I will be watching closely when we get there. Now, yesterday, when price came through this 65K range here around the mid-cycle top, there was a lot of profit taking. And so we saw a bit of a intraday sell-off happening, and then price got right back into action. So I expect that we might see the same thing as we move into these other levels here. And again, this 2021 top is very critical, in my opinion. Back to FireCharts here, you can see resistance overhead, our immediate resistance here in this 67K range, about 42 million stacked there. Down below, where's the support? Well, we have a nice ladder of support between where we sit now and 63 and change, and then another large block of support down in the 50K range. If we zoom in a bit, we can see that, here we go, 63.5 has about 20 million, and 65K has about 16 and a half million on it. But it's insulated. It has another 12 million right under it. So there's decent bid liquidity here, holding things up at least above the 200-day moving average. But I'd like to see it stay above that mid-cycle top to have more confidence in potentially taking out this level before or perhaps soon after this monthly quarterly close coming up. And remember, we have two closes. We have three actually. We have the Sunday weekly close, and then on Monday we have the monthly and quarterly closes that we're watching. In terms of what's happening now, as we zoom in, you can see how we've had this series of blocks of bid liquidity that stair-stepped up and helped push price upward. And now we're resting on, just about 8 million in bids right here at this 65.5 level. That's obviously not a lot, but below it, we have, another ladder of bid liquidity. If we could stay up above this level, if we could stay above that 65K level, at least for the week, that would be impressive to me if we got the weekly close above that. But you can see these little pockets here, right? There are some sell walls above, but there's pockets in between that are going to be very easy to penetrate, right? It will take nothing to get there. So if we can clear this 67K, then 68 comes fast. And if we can clear 68K, then 69 comes fast. 69 is going to be, like I said, don't sleep on this. It doesn't look like there's a lot there, but I promise you, once we start to move into that range, there's likely to be more resistance coming in there. At the moment, it's stacking on 70K. And so, again, our all-time high is up around just shy of 74K, right? So look at all the pockets of thin liquidity. You basically have these rungs of ladders of sell walls here. And it's significant. There's 20 million, there's 18 million, there's another 13 million. So there's a decent amount of liquidity at each of these levels, but there are gaps in between that are going to be very easy to shoot through. So be mindful of that. These gaps really open the door to volatility. And to the downside, same thing. So, one more look at the candle chart here in terms of where we could potentially go. To the upside, my eyes are first on this 2021 top. And then, of course, where all that liquidity is sitting at 70K. And if we can clear that 70K level, then I think we do get a chance to grind here. And this is going to be the difference maker, whether we can print this higher high up around this 71.9 range. Basically, we got to get to 72K. And if we do that, boy, we have a completely different ball game, right? To the downside, if things break down on the downside, then obviously I'm looking first at these key moving averages, and then our double bottom to potentially become a triple bottom. Uh, if we lose that, then we've got this wick here down to 49 and change, and then ultimately this trend line, which to me is really the do or die level. I mean, there is a chance on the weekly that if we got past that we would bounce from this 200 week moving average, but that's a long way down, right? That's a huge correction from here. And at the moment, it doesn't look likely. Just to give you an idea of what that would mean if we were to go there from here, if we went to the trend line, it'd be, 25% pullback is not out of the question. That's something that we can see on a regular basis in this game. Working our way down to that 200 week would be a 40% correction from where we are now, and it would be a 46% correction from our current all-time high. None of that's out of the question. I just don't think it's a high probability at the moment based on what we're seeing in the order book and the momentum that bulls are getting here, at least in the short term. Hope that gives you something to think about over the weekend. I do think that, the real excitement is going to come around the monthly and quarterly close. So be watching for that. In the meantime, hope you guys have a fantastic weekend, get to do something you love with the people you love. And as always, trade safe, my friends.